Let's take a look at this week's Real Estate Real Talk. If you're thinking about buying a home, there's an important date that you're going to want to circle on your calendar. Here to tell us what that date is, Los Angeles real estate agent and our expert here on Current, Keri White. Hey, Keri.
Hey, good morning.
Okay, so changes are happening. That's happening on May 1st. Can you tell us what those are?
Well, here we go again. I love Current here is always giving out the most up-to-date current information. We have the mansion tax, but today we're talking about credit scores and down payments, which of course is the number one thing that's important to home buyers. So there are big changes happening with the credit score and the down payment. We all know that's one of the most important things when it comes to buying property. So starting May 1st, which is right around the corner here, upfront fees for loans backed by Fannie Mae and Freddie Mac, which is a government-backed loan, are going to be adjusted. And in some cases, most cases, people with higher credit scores are going to be penalized.
All right, well, Keri, we have you here to keep us up to date. That's why we have the most current information. All right, so why are these changes being made?
Well, everyone is trying to do what they can to fight this lack of affordability right now. Instead of looking at supply and demand, my personal opinion, they're looking at trying to take money from people who make more money. So right now what they're trying to do is if you have a credit score of 659 and you're borrowing 75% of the home's value, you'll pay a fee equal to 1.5% of the loan balance. But with these changes, you would have had to pay a 2.7% fee. Which on the other hand, if you've got a credit score of 740 and higher, you're going to be paying 0.25% for a loan, 75% value. But after this date, you're paying 0.375%. So they're making these small changes. And not everybody does a Fannie Mae or Freddie Mac loan, but they do make up 60%, about 60% of what home buyers are getting. And in some cases, people right now are switching to these types of loans because of these changes with these scores. But again, why are they happening? Like we started with, affordability is a problem, and they're trying to see how first-time buyers can get into the market, because that's a huge chunk of millennials. They're the highest proportion of people trying to buy homes right now. So they're thinking if we change some things with the credit score, maybe some people that can't afford to get into a home can get in. And this has to do with their closing costs. So the upfront fees to get into home is usually the number one reason why people aren't able to get into homes. I know I'm saying a lot right now. Hopefully that's all making sense.
No, it does make sense. And you're right. Those are some of the biggest costs that you have when you're looking to buy a home. Are these, would you say, are these positive changes?
Well, proof is in the pudding. It's my new favorite term these days. We're going to have to see how it shakes out and what actually happens. Will there be more opportunities for first-time home buyers? Are these people necessarily approved even though they're paying less? Like, can they sustain their mortgage once they get into it? Or is it an opportunity for people to actually get ahead and start to build that long-term wealth? I guess only time will tell, but let's roll with it and see what happens. And if not, go the opposite way.
Yeah, you're right. Only time will tell when we see this kind of unfold throughout the years. Now, are there any other changes that are coming up that we should probably know about if we're interested in buying a home?
So yes, also the Housing Finance Agency plans, and this isn't until August 1st, for borrowers with at least 40% debt to income ratio and 60% loan to value, which means you're borrowing 60% of the home, calculated by how large the loan is. These people are going to be, there's going to be some delay and pushback on this. So with the debt to income, they're going to change the way the fees are structured with these types of loans. So they're not exactly sure of what they're doing with that, but they are going to change your ability to borrow based on your debt. So might be time to get into more debt is what they're saying.
So we have May 1st, which is right around the corner, as you said, and August 1st, which I got to tell you is also pretty close. So these are the changes that are going to be made. Thanks, Keri. We appreciate it.
Absolutely.
All right, you guys tune in every Wednesday to see more Keri and more Real Estate Real Talk. In the meantime, make sure you're hitting that follow button on Instagram at Keri Ann, and you can also subscribe to her YouTube channel for more segments like this to get a lot of information from Keri. That's at Keri White Real Estate.